Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Rima. Guys, hi. Good morning.
Hi, good morning. Yesterday, it was heartening to see the markets recover from the day's low. But we've got another expiry to contend with tomorrow and so many earnings. 4 nifty companies report their earnings today and many from the F&O, non-nifty companies.
Well, that's right. After a while, we saw green on the screen and it was good to see, and bright green as well. After a while, we ended at the high point of the day, but obviously that was an expiry-related move. Let's hope that we're in for better times in this series.
Absolutely, Nigel. And I think, yesterday we were 4 days away. Today we are 3 days away from the union budget, right? And I want to just start with that point. I'll get to the global stuff, etc. in just a bit. But, the basic idea was that, this is a market which is heavily short and FII positioning, and Nigel will put out the data in terms of F&O positioning in just a bit. But, as when we came in yesterday, FPI shorts and index futures were at an all-time high. You were going into a big event 4 days out. So will they be covering? And I think I'm starting with, something similar today. It's just that it's not 4 days, but 3 days, right? So more room for more positioning-led rally as we begin this session and over the next couple of days. I think there is room that the market is able to do it. Let's see. The budget may not offer too much, but we'll only be wiser in hindsight. Going into the budget, and everybody will say, well, it doesn't matter and this and that, but it's a big one. So you will need to be prepared for that if you're trading and if you're sort of heavily on one side of the trade. Now I'll start with the global stuff, right? Massive slump in the broader dollar. The dollar index was down 1.16% last night. And, we are sub 97, 96 point something on your screen. This is big. And again, something I highlighted yesterday as well, which is, on Monday when we were not trading, the dollar had fallen sharply against majors, against Asian emerging market forex. And that kind of continued last night in the US session as well. And the reasons, of course, are a few. But basically, President Trump once again saying that he's not concerned with the decline in the dollar. Actually, his exact quote is, dollar is doing great, right? And so in a way, explicitly green-lighting the decline that we've seen in the dollar. They want lower dollar, lower rates. That's well known. It was one of the first few things which we knew when President Trump and, of course, this new administration took charge. The rupee recovered yesterday as the dollar has been weak. I think, and that rupee recovery allowed equities to breathe a little bit as well. I think it's quite important. It was up 19 paise. We ended at about 91.71 against the USD. I just want to point out just one thing, right? The 10-year GSEC, and this is something which is a little perplexing, that actually yesterday closed at a new all-time high. We are at 6.71. So, is this something with regards to the budget? Is the bond market getting a sense that the government is going to expand the fiscal a little bit, do a little bit of deficit spending? Is it something else? But I think this bears watching. This is negative equity, and you don't want yields to head higher if other things start to cool off a little bit. But something we will pay attention to and talk more about. U.S. equities hit new all-time highs. S&P 0.4% higher. Nasdaq 0.91. Anyway, they were about 1, 2, 3% away from all-time highs, even with these corrections in the recent past. Oil prices, a sharp move. 3% higher, 67.5 is where Brent oil prices are now at. Precious metals, the rally continues, and what a move, right? Silver, 8.5%. I'm looking at spot prices last night. So 8.5 and 3% on gold, respectively. So, silver ETFs, gold ETFs here in India, of course, racing ahead to try and keep pace with the move in that sense. Consumer confidence in the US that fell to the lowest since 2014. Perhaps another reason why the dollar perhaps was a little bit on the back foot last night. And of course, US is proposing holding payments to private Medicare plans at the same level it was last year. Expectation was that it'll go up 4-5%. It's actually absolutely almost no change. So there are companies here, companies like Sagility, IKS, etc., which we will need to watch out for, and we'll try and speak to some of them as we go along. Big earnings later tonight, which have the ability to move markets. Meta, Microsoft, Tesla will report. There is a Fed decision that is tonight, which we will react to tomorrow morning. But in all likelihood, the Fed is expected to hold rates and leave rates absolutely unchanged. The big headline, whenever that comes, and it's expected this week, is, the announcement of who will be the new Fed chair. I'll just tie in the levels, Nifty, if this bounce is to continue. By the way, yesterday we almost got to the 21st January low, which was 24,919, and then from there we saw a very sharp bounce. And I think it's possible we head to 25,440, which is the upper end of this falling channel on the index. Hopefully that's another 250, 300 points away from here. But let's see if you're able to do it. We can maybe show you a graph as well, which kind of puts that channel pictorially much more powerful in that way. Bank Nifty saw a sharp bounce in the last 1 hour, and here the 20-day moving average is nearby now with yesterday's bounce, which is 59,516. So that's the overall picture. GIFT Nifty will give you a quick sense of how we're likely to start, and then we'll pick it up from there. 14, 15 points higher is where we're at. As I said, positioning and where we stand there. Nigel has walked across to the wall. Nigel, over to you.
Well, yesterday was a relief rally that we saw, and it was good to see. In terms of volumes, it was rather high yesterday. And if you look at the cash market flows, well, the FIs, they were net sellers, close to the tune of around 3,000 crores, while the DIs were net buyers. But, the highlight yesterday was that the gross volumes were much higher, telling you that there was an expiry-related factor that did play out. So the expiry day went to the bulls, the January series went to the bears. And in January series itself, the Nifty was down close to around 3%. But keep in mind, the Nifty Bank was the outperformer because that was as flat as can be. Which brings us to the rollover picture. Market-wide rollovers, Nifty rollovers, in line with what we've seen on an average for the last 3 series. But the Nifty Bank, the rollovers out there were relatively lower. Because for the last 3 series, it was ballpark around 75 to around 76. Now, that, in fact, has come down to around 71%. So it appears some of the shorts didn't roll over their positions because, remember, this market is net short. If we're looking at the total open interest, the Nifty futures open interest, well, it is heavier at the start of the series. If you compare it with the previous 2 series, definitely the open interest is higher because you've got plenty of queues coming up in the February series itself. What about positioning? Similar to what we have seen in the past. The FIs, well, in percentage terms, they are net short, while the clients, they are net long on the index itself. But in absolute terms, that's what's telling you the story, because the FI net short positions is much higher in comparison to the past. And keep in mind, we had a regrouping with regard to the contract size. So the FI net short positions are aggressive at 1.7 lakh contracts short, while the clients, they remain net long as well. Going to the options data, the 25,000 call as well as put, they were fairly active. If someone is writing these strikes, well, and playing out a short straddle out there, then they're pocketing close to around 550 rupees, and they're hoping that the Nifty stays in this 1,000-point band. But otherwise, if you just look at the data points and when you punch in the options data, the premium out there, for example, the 25,000 call, premium's around 400 rupees or thereabouts. So the resistance that will come in at around this 25,450 or thereabouts. While on the downside, the 24,900 mark, we've gone there a couple of times and we've bounced off that. So you'll be fancying your chances if you get a dip towards that 24,900 odd. The big cues to track in the February series, we're going to be having the Union Budget in the next few days. Earnings continue to trickle in, and big central bank meets where they talk about the RBI, FOMC, or even the ECB. So interesting times. We're a good close to the past series. February is giving some hope that maybe we could extend by a couple of 100 points on the upside even from here. And the Nifty Bank will have to play the all-important role.
Thank you very much for that. As I said, it's an action-packed day for Nifty companies. L&T, Maruti, BEL, SBI Life report their numbers, and then many F&O companies like TVS Motors, SBI Cards also reporting their earnings today in the Parliament. The budget session officially kicks off. Tomorrow is the economic survey, and then, of course, followed by the budget on Sunday. And globally, eyes will be on the FOMC decision and big tech earnings like Microsoft, Meta, and Tesla.